Hey guys, and welcome to another week of State of the Market. As you all know, I am Marc Fattore, joined by my lovely co-host Jennifer Dolh. And this week we tackle a few questions that we have been speaking about here at JR quite often with some of our clients, as well as some others that have been asking us questions. So Jen, I'll let you take it away.
Great, I have 3 questions for you today.
Awesome.
I won't take too much of your time anyway. So one of them is, with the decrease in market conditions and a lot of less people attending auctions these days, putting offers in properties and just losing general interest within the investment space, is now a good time to buy real estate?
Yeah, that's a really, really good question. I mean, to be fair, we've probably received that question quite a lot in the last 3 months alone. There is no right time to buy, right? That's the answer we tell everyone to start with. There's never a right or a wrong time to buy. But the most important thing is that you need to do it when you're comfortable. Now, of course, there's always going to be changing market conditions. We know that there's going to be, so many outside factors that we cannot control, such as, for example, interest rates, less people being interested in real estate, things like that. But this also creates opportunity for us as well. So if you are in a position and it is the right time and you feel comfortable enough, go into the market, whether it is through us, whether it's on your own, as long as you get into the market, because I think these are the times that create the opportunity that people, they do fear. And unfortunately, we need to overcome that fear in order to strike while the iron is hot. But again, it really comes down to your comfort level as well.
I agree. I totally agree, especially with the interest rates happening at the moment and the rising of them.
Absolutely.
The second one is commercial real estate something that should be included in a portfolio when at the start of your investment journey or later on? And what stage would you think it's time to make the right time to make an acquisition? Yeah,
again, another great question. A lot of my clients, I always say to them, it depends on where you are in your journey, of course. Right now, if you're just getting into real estate, it is good to start off with a good base foundation of residential real estate. Commercial real estate is still very, very good as well. Now, I'm not going to go into all the different pros and cons of each one, but essentially we need that residential growth or capital uplift that we do get. Everyone needs a place to live in. But what we get from the rental yields, for example, on commercial assets is something that in most cases far outweighs what we're getting in residential. Okay, so there really is, again, there's no right or wrong answer. It is when you're comfortable, but personally speaking, I would be at the start of my journey getting more residential real estate to have a good base foundation, and then later on, as I'm looking to start substituting my active income from work for my passive income, I would be looking to opt for more commercial real estate.
Great, thank you. That was a great answer, actually. A lot of people are holding back, waiting for the right time to buy or a dip in the market. Is this the right strategy to not only get yourself a property at a good price, but also make those additional gains in a short term?
Yeah, again, another question we've received quite a lot. And this is something that we probably don't agree with all the time, where a lot of people hold back thinking that there's going to be a dip in the market. So something I'd like to share with you guys as well, and I'll speak to the team in sharing this also, is that real estate in this country at least will continue growing. Now, if I use Maroubra as an example, I spoke to another client about this the other day. If we converted the pound to AUD in today's dollar, there was a two-bedroom house, I should say, in Maroubra that cost, I think, $16,500 as an example. And fast forward to 2022, mind you, that was in 1965. 2022, the median price for Maroubra is 2.9 million. Okay, so we need to weigh up what works for us and what doesn't. If we are saving a little bit, if we're reducing our stamp duty costs by saving an additional 50, 60, 100K on the purchase price, yes, by all means, wait for that dip. But I think it's a correction more than it is a dip. And to confidently say that we are going to, see a significant drop in order to take a massive advantage of, I think is being very advantageous, to be fair. Personally speaking, I wouldn't be waiting, because at the end of the day, when I invest in real estate, I'm sure much the same for everyone here as well, we invest for the long term. So if we're getting a 5, 10, 15, 20, $100,000 discount, will that far outweigh the benefits that we would get from a long-term perspective as well, right?
And if we think about it, back in the day, people were paying much higher in terms of interest rate. So it's completely different in terms of that side of things. But at the same time, it just depends on the wages, and depends on how you know, the
Absolutely.
economy's doing at the moment.
Absolutely,
So,
no, you're right, 100%. And again, it really comes down to, are you in it for the long term or the short term? Because of course, a short term gain with a quick flip, yeah, you might be able to make an extra couple of dollars. But the reality is, in today's real estate markets, we're not buying for the short term because we're not making enough gain in order to really profit, unless obviously more money's been spent. But we'll save that for another session as well.
So thank you for answering those questions. Guys, if you do have any questions that you want to find out more about, you're welcome to shoot me a message on LinkedIn directly, or Marc as well, and we're more than happy to answer this for you next week. But other than that, it's been your Tuesday State of the Market, and I hope you have a lovely week. Enjoy.
See you guys.